Hey traders and investors, it's Serge Berger here. Today I'd like to have a look at the healthcare sector. If you consider the healthcare sector, the importance of it generally for the general economy, also just from a psychological perspective, a lot of people are invested in some of those big pharma stocks and things like that. And of course, you have the biotechnology sector being a very hot stock, sort of trending action, kind of sub-industry of the healthcare sector. It's an crucially important area of the market to be aware of. So what I want to quickly go through is first of all the broader trend of the XLV, which is the S&P 500 healthcare sector ETF, the spider ETF, so to speak. So this thing is up like almost 200% off of the early 2009 lows, and you can see so far, obviously the slope here, again from a purely technical perspective, is getting increasingly steep. Now I suspect that we're probably in the last sort of hooray stage for this cyclical bull market, but that stage has probably a little bit more to go here. So it looks interesting to me from a long side. Let's zoom in a little bit closer and on this daily chart, and you'll see that we actually last Friday saw a pretty significant move in the XLV, which basically means that the XLV broke out, okay, and it did so in a very constructive manner. In other words, it didn't just break out, it did so by sort of coiling up before. So, for example, over the past couple of weeks, we've seen the XLV sort of consolidate here, right at the upper end of this resistance, upper end of the recent range of this, sort of year-to-date range almost, after rejecting the lows very clearly here in mid-April. So to me, every time I see something sort of churning or consolidating below a major resistance area, and then I see an ultimate breakout move like we saw in the XLV last Friday, and actually last Thursday and last Friday, that to me is very significant, particularly when it also coincides with an important move on the weekly chart, which this of course did. If we dig a little bit deeper now and look at just some of the components, I highlighted the biotech stocks before, and the IBB, which is the Nasdaq Biotechnology Index here last Friday, actually broke out of this consolidation area as well. But away from biotech, if you look at things like, for example, Eli Lilly, hugely important stock, and you can see this thing last Friday too actually broke out in a very meaningful way. And if you want to really see how important that move was, you peel back this chart all the way back to say 2004, and you can see if you sort of were to draw a line here, you would see that the resistance area that was broken last Friday wasn't just on a daily chart, but also on a weekly chart going back all the way to 2005. Very, very bullish for Lilly. Elsewhere, you see, for example, Amgen 2 working on an impressive move here. In the near term, it's off a little bit so far here right now, but it's working on a sort of a higher base right now, and of course, on last Friday, it also broke past lateral resistance. So we need to see follow-through buying here, or at least holding of support. It's not the kind of stock I'd jump into right away. But you can see the general picture is still very supportive for the healthcare sector. So to me, something to look forward to. Not until we see real weakness would I be going short the broader market. You want to see some weakness in healthcare as well, because that has tended to be very strongly trending market for many years now. So hope this makes sense, guys. As always, if you got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader. See you in the next video, and take care.